Welcome. I'm Christine Svara from RISE. We are an initiative that supports industry action at scale to advance gender equality in global supply chains. And we focus specifically on the garment, footwear and home textile sector. The focus of our conversation today is on low-income workers in global supply chains, specifically the 60 million workers, 40 million of whom are women, who work in garment factories across the world. In this conversation, we're going to talk about what happens when you bring two very different industries together, the financial service industry and the garment industry, and use a combination of financial capability building and digital wages as a catalyst for financial inclusion and resilience for workers. So we're going to be looking back at what we've learned, and we're also going to be talking a bit about what's next. As RISE, when we started our work on financial inclusion a decade or so ago, many workers were paid in cash. They talked to us about having limited or no savings. They told us they were struggling to meet their immediate financial needs, to absorb any financial shocks. And workers consistently expressed to us that they weren't feeling secure and in control of their finances. Women workers in particular told us, and they actually continue to tell us, that they have less control over their income, often handing over some or all of their income to a family members. So in the last decade or so, we have been working directly with around 400,000 workers across 10 countries, and that includes Bangladesh, Cambodia, and Egypt. And what we have learned is through bringing these two sectors together and through this combination of financial capability building and provision of digital wages, it leads to kind of three core things. One, it leads to financial inclusion and resilience for workers. We've seen a 25 percentage point increase in savings, but we've also seen a similar improvement in financial decision making, particularly for women, and an overall confidence in managing emergencies. Two, we've seen that this leads to efficiency gains and transparency gains for the garment industry. For example, we've seen an 84% reduction in admin time spent on payroll in Cambodia. And three, this really represents a new and active market segment for the financial service providers. We've seen above a 33 percentage point increase in men and women opening mobile money accounts, paying bills, and using them to send money home, pay bills, and buy groceries. So I'm joined today in this conversation with the representatives from each of those two separate industries. Mo Rizwanullah is the Vice President of Global Financial Inclusion at MasterCard. Welcome, Mo. And Adrian Sherman, the Vice President for Environmental and Social Responsibility at the Children's Place. Welcome, Adrian. Adrian, if I may start with you, financial inclusion for workers in your supply chain, why is that important to the Children's Place? And could you say a bit about your experience of really increasing financial inclusion across your supply chain?
Yeah, absolutely. Thanks, Christine, for having me. Maybe I'll start with just the journey we've had at the Children's Place. So we're one of the largest specialty retailers for children's apparel and footwear, for those who don't know us. So we've really been involved in this worker well-being work for the last 10 years with BSR, with CARE. Christine, we've worked a long time over the last decade, as you said, on this. And our entry into the wage digitization program and these programs was really a number of years ago in Bangladesh, when BSR was running the digitization programs there in Bangladesh. And the intent for us as we were learning through that process was really to strengthen women workers' control over their earned income. And then I think the ad, which we had not been involved with, was couple that with access to financial services, really positioning women workers and their families for better savings plans, for being able to plan financially for the family. So that was kind of the intent and the reason. And we learned a lot through that program in Bangladesh. Through that program, once we understood the impact, we actually in our supply chain set 100% wage digitization goal across all of our factories, across all countries. And so we're in 21 different countries around the world, the usual suspects, I think, for apparel. Once we learned through that Bangladesh program, we were able to work with Rise and with MasterCard in Cambodia, which was another area that we saw a big need for digitization, and really roll that out there. And again, I think, you know, you've mentioned, I think, some of the impacts, Christine, but as we roll this out, what was really interesting for us is really hearing from the factories and the factory managers the impact it was having on the workers. And I think that was the most interesting part. Usually, many brands were rolling out initiatives, and they're training up the factories on the why. And we got to a real point as we were rolling this out where the factory managers could really see the impact for the women workers, and felt actually an amount of pride of making sure that all the hard work that they were doing, they were able to actually receive their wages themselves. We learned, I think, through this process, which we didn't know about, that, as you mentioned, many times these workers are handing their paychecks over to family members, to husbands, to parents. And so, for us, being able to make sure that women workers are receiving those wages and are able to use financial services in the countries they're in was a big benefit.
Right, and actually, you mentioned that you set this target of your entire supply chain, and it's one that we've seen with many of the others. Many of your peers, Adrian, have set similar targets. So I know I said 400,000 workers directly in the beginning, but actually we're looking at millions of workers here making a shift to digital wages. So Mo, you've been looking at low-income population and garment workers and their challenges a little bit broader. What have you seen in terms of challenges for their ability to access, to use, but also to really benefit from financial services? So what have you seen in terms of challenges, and what are the fixes? How can they be resolved?
Well, first of all, thank you for having me. It's a pleasure to be here. That's obviously a very complex topic, a very complicated issue, depending on the market you're in and where you are in the world. But I will try to simplify for the purposes of our discussion today. If I were to bucket some of the barriers to financial inclusion, if that's the way we want to put it, on the supply side, for example, I would say the way I think about it in a big bucket is just general lack of access. So a lot of the times the underserved population just having limited access to banking infrastructure. Now, that could be due to physical distances. It could be due to the fact that infrastructure hasn't reached in the deep rural areas. It could be a lack of digital connectivity. The reach of the internet hasn't reached that particular population at this time. It could also be, surprisingly, we don't think of it directly in the sense, but physical infrastructure like roads, transportation, these help bring services and economic activity and merchants that are often the backbone of providing services to these low-income populations or underserved populations that rely on perhaps merchants for financial services. Another barrier could be the cost or affordability of those services. So there are a number of things, a lack of appropriate products that don't meet the specific needs of the underserved consumer. It could be a regulatory issue. So there's a bunch of stuff on that side in terms of access. I would say maybe the supply side of things. Also on the demand side, we've seen a lot of issues with trying to help build trust in the financial system. It's a normal and natural thing not to trust a large institution or to have a certain view of a bank that maybe has not been very welcoming to people who look like you or who work in the places that you work. So I would say, low awareness of financial services, low financial literacy, the lack of knowledge or understanding of products and services is another barrier. And those are all things that we have to work on, and usually in partnership with a wide range of stakeholders. It's very rare that we'll find one player who can solve all of those things. The private sector, the public sector have to be involved. The other thing I will call out also is cultural and social norms are also a barrier, whether we're talking about women's participation in the economy in general, or whether or not they're encouraged to participate in financial activities. whether they have the same access to digital infrastructure as their male counterparts. That also plays a big part. And I will also call out specifically things like, lack of traditional credit data is another big issue. Not being able to assess someone's credit worthiness, whether they're a consumer or a small business that needs a small loan or a credit loan to help boost their business or make ends meet. That's also a big challenge with various populations who are underserved. And then, lastly, I would say the regulatory and policy issues are always there in the enabling environment, right? Are there proportionate rules to opening an account, right? Do I need an ID? Do I need a very full, government ID to open an account, or can I create a smaller, lower risk account with more basic forms of ID? Is there a national ID system in place? So there's a lot of complexity there, but if I were to bucket the two, I would say, infrastructure supply side is one area, and then on the demand side, helping consumers building their capacity and their trust in these products and their awareness of these products would be the other large area.
Thank you. I'm going to come to you now, Adrian. So Mo talks about trust here, and I asked you before about the brand perspective and thinking a little bit about the supplier perspective, because certainly our experience has been that your vendors, who are the ultimate employers of these workers, really supported us with the trust perspective. So you were saying, Mo, that a financial service provider, is that even a place for someone like me? And that certainly is something that echoed in every single country that we've been working in actually in all of the 10 countries, and their ability to be working with their employer, whom they knew were going to pay them every single month. That really helped us in some of the trust aspects. But Adrian, when you've been working with your suppliers, what have they mentioned as some of the biggest challenges, and how you work with them to overcome those?
Yeah, I think going back to that comment on cultural norms, I think that has been a huge hurdle. And I look at it in two ways. Number one, it's the workers themselves, but number two, it's the factory managers and it's the factories themselves. So if I look at the workers, there are some regions we have been in. I can think of, Cambodia and Pakistan, where it's just norm to get paid in cash. It's not the norm to get paid digitally. If I'm just going to pull it all from a cash machine right off the bat, because that's what my family does. That's how we have managed cash, right? And so really, as we look long term to access, income digitally and then to the financial services planning, right? The workers are just thinking about that first part, which is like, this is harder for me. And so I think working with facilities and factories and workers to really educate on the why is the big challenge that we had in some of these regions. And it really takes strong partnerships from suppliers, because some of those problems were, okay, well, we do need to get some cash machines in our facilities because they're not around here, and that's something that the workers are asking for. And so having kind of, suppliers that are willing to go on the journey with you and work on that. The second piece is the suppliers. And I can think of many instances where it's tough. The workers don't want to do this. What is the reason? This is a lot of work for us, and we have a lot of stress producing your orders. So why do we need to do this as well? And so the same thing in terms of education for factory managers and factories on the ultimate why and the goal in the long term, I think was really important. And we had wins there, as you know, Christine, in Bangladesh. It was very interesting. We have large factories, 5,000 to 9,000 employees. And some of it's just good business. So, as we're working with facilities, they realize, oh yeah, you know what? I have a truck backup with loads of cash, and I need to give it to our HR teams, and there are huge queues to pass out wages, and this takes an hour after work, burning into employees and females' times in terms of being able to go home and be with their family, right? If they have to stand in line for an hour getting paid, right? So there were efficiencies there that I think facilities and factories learned in terms of this makes a lot of sense for us as well, reduces cost, reduces our time, and ultimately, benefit the workers as well. So just a lot of partnership, I think, and training in terms of where we're trying to go and the reason behind it.
I think that's true. And I'm also thinking about how important it was when you make that first shift to have factory management, the financial service providers, the RISE team are always on the floor on the day where it happens, because there's nothing scarier than the very first time that you're used to. I mean, yes, standing in line might be a pain, but you get a wad of cash in your hand at the end of it. Now, when we make the switch the first time, there is this suspense moment where someone says, we have now paid your wages, and people are having to figure out how do they check. And they actually, the very first time, I think the trust only is kind of reinstilled, as soon as they get out to that ATM and they can take the cash out. And then what we've seen over time is that really starts to space out. We're seeing, and we've looked at some of this together, where people starting to pay for groceries in places like Cambodia. They are, the first thing they do is always send remittances. But it's those use cases and really building them out that continues to be something we're working on. I think that's probably fair to say, isn't it? Now,
just Christine, I just want to jump on. I think from the brand perspective, it's so important for us to have partners like RISE and MasterCard work on that financial services piece, right? Because we can assist and bring factories to the table and help with the why, but we're not experts in that, and we don't understand what are the best services in the country and how do we connect, those services to the workers, and how do we make sure there's that feedback loop where it's working. And that's, I think, been the power of some of these collaborations, is that we know that organizations like yourselves are working on those issues. And we've seen that prove out, because over time, for example, in Bangladesh, all of our factory managers know those services are a benefit.
Yeah, I think absolutely key for us certainly for us with MasterCard, but also with the local financial service providers, to have quite short innovation loops. There were very immediate feedback loops saying, oh, now this thing isn't working, or this thing isn't working, and then that was tweaked and resolved. Now, if I want to shift to taking a slightly what's next on the horizon. So MasterCard has really been taking the lead in shifting the focus from financial inclusion, which is access to products and services, which makes sense for you. In my head, I can make sense of that for you as a company. So this longer idea of financial health, which is really thinking of financial inclusion as a means to long-term benefit for people. Now, it'd be interesting to hear a bit about why you are making this shift, but also if you could share, what does a journey to financial health and resilience for garment workers, what does it look like? How do we get there? How do we develop the use cases?
I'd be happy to, and I echo Adrian's comments that partnerships are a key part of this, and your comments too about finding the right use case. So to talk a little bit about financial inclusion as a journey, I think the concept of financial inclusion as a journey is not perhaps a novel one in the circles of inclusive finance and people who are talking about financial inclusion for many years. There's been quite a bit of dialogue over the years now about inclusive finance needs to be more outcome oriented. And I think that's happening as a natural result of where we are in the world with financial inclusion. So, when MasterCard began their journey with financial inclusion in 2018, there were something like 2.5 billion people in the world who were unbanked, so without any kind of transactional account. So obviously the focus was a lot on how do we work on the access side of things? How do we help people get an access to an account? I think what we're doing is also now taking a more holistic view, as now the world, we have 1.4 billion people. So that's about 1 billion people have been included since then to at least get access to an account. I think what we're seeing more and more is that we need to be aware of not just the drivers and barriers that affect access, but what are the drivers and barriers to usage? So what we were talking about right now, in fact, like what are the relevant use cases, right? I try to illustrate this point when I'm in a room in New York with people in an air-conditioned room, and I try to sensitize them to what's happening. I say, like, imagine if us working in MasterCard or wherever I happen to be, all of a sudden our employer were to tell us you're going to get paid in Bitcoin from tomorrow. You would struggle to figure out, how do I pay my rent with Bitcoin? How do I buy my groceries with Bitcoin? And it's the same challenge that an underserved person might have when their wages goes from cash to digital. And that's why you would see them maybe rushing to an ATM, is because if my landlord only takes cash, then I'm going to be paying in cash. So that process takes a long time, and of course we can't solve all the ecosystem problems, but we can help grow what we call acceptance, right? How do we figure out ways that this underserved person can make the payments that are meaningful to them in their use cases that are most meaningful to them? It's like paying rent, it's paying my kids' school fees, it's paying my utility bills. So we're trying to figure out what those use cases are. So towards this end, we've come up with a very basic framework that plots financial inclusion in a 4-stage journey, and this is also something. There are variations of this. We don't think this is a unique thing that we've created, but in practice, I will also say before I go into the journey, we know that it's a very complex, non-linear journey that you can not only move forward in this journey, you can also move backwards, right? So the journey towards financial health can also go backwards. But it helps us to frame our product strategy and to understand the needs of our customers. And I think the unique thing that we are trying to do is working with the private sector, working with our customers who are financial service providers and issuers of these products to understand, this journey, and then what are the needs of consumers along this journey, and then what are the kinds of products and services that will help someone move from the various stages. So the various stages are very simple. The first stage is access, and that's really how do you go from not having any kind of financial account to getting an account. The world has focused a lot on that problem, and it's still not solved. But I think with the success of things like mobile money players or fintech players, over 1 billion accounts have been opened, I think now, or 500 million mobile money accounts have been opened now globally. So that has happened, and I think we should continue to focus on that issue for the 1.4 billion who are left. But I think after that phase of access, we look at very broadly usage as the next stage. So that is now someone using their account in a more intensive and I would say daily manner, right? Not just to receive my wages, but now maybe to pay for my rent, pay for my groceries, pay for my bills, maybe save a little bit of money. Of course, that's also important. What kind of basic financial management? And then as you become more and more familiar and begin using financial services more, you move towards what we think as the last 2 stages, which is financial security. So that's the ability to effectively manage your near-term and long-term financial obligations, and maybe even to begin investing in your future. And I think that propels you towards the 4th stage, which is financial health, which is the North Star of the journey. Really the purpose of why we're trying to financially include people in the first place is that they can reach a place one day where their financial needs are fully met, and that they get the full benefits of financial services, not just having an account where they receive money and cash out. So I think what is interesting for us, and we're still in the middle of this journey, is to work with issuers to look at their data and to understand, I have a portfolio of underserved consumers. Where are they in this journey? How can I help someone who has opened an account go to usage? So there are a number of key things that I've already mentioned. Things like utility bill payments might be an area. Basic merchant payments, right? Where do I go for grocery shopping? So we're working with our partners to look at things like, I think Adrian mentioned having the ATM in the right place, because we understand that accessing cash in the first stage is a necessary step to get towards a more digital future. So a lot of this work is illustrated in a white paper we published recently with Nubank, where we looked at their data from their customers in Brazil to analyze where their customers are in this journey, and then to figure out what products actually help customers move, right? We're looking retroactively at behavioral and transactional data. So I mentioned credit earlier, and I'll just put that one last point on this, that we saw that being able to access and use credit responsibly, so it's not just giving someone credit, but teaching them how to use it responsibly, was a major propeller, a major way that people were able to move towards more sophisticated financial products. So I think that is exciting for us, the concept of the journey applied towards real world practice with real issuers and real financial service providers and their customers, to see how can we help move people, what holds them back, what propels them forward. It's something we're still doing, and I think that's an exciting new chapter in the direction that we're taking, and we look forward to working with our partners to actually start figuring out how do we help that journey. So education is definitely a big piece of that. So partnerships with RISE, partnerships with the private sector, with issuers, that stakeholder approach is really what's necessary to create the situation for people to move towards health.
Thank you, Mo. Adrian, when I talk to workers, this idea of long-term financial health, they may not use that term, financial security or health, but they all tell me that they go to work so they can put their children through education. They want, I've never had a conversation with a worker who didn't want their children to go further in education than they did. They talk about having the ability to respond to emergencies, someone getting sick or something happening to your living accommodation, or bigger events happening such as COVID. We hear them talk about wanting to make financial plans for life after the factory, such as buying a plot of land. So I guess in short, this is really, they look at the long-term return on their time investment in the factories. So when I think about the garment industry, I think it's probably fair to say it isn't always known for long-term thinking. It's called fast fashion, after all. And so I'm really interested in your perspective on this idea now that we've had a breakthrough moment on the access to digital wages, and we're seeing early signs of financial resilience and financial security starting to emerge, and certainly some of those use cases are broadening out. But from, so your perspective on this idea of moving from this focus on wage digitization, where there is a business case, there are efficiency gains to be made, to this idea of long-term financial benefits, financial health for workers. Does that resonate with you as a children's place? What can the fashion industry, brands, buyers, suppliers do to support that?
Yeah, well, I think it resonates with our industry for sure. I mean, and you mentioned it, I go back to COVID. If you look at the devastation of COVID in terms of what happened around the world, in the garment industry, in the supply chain, it had a devastating effect on families and women workers, right? And so that's why it's so important, and that's why everybody should care about it, and that's where the business case is, right? Separate from that, we also know businesses up and down based on the economy, inflation, and unfortunately in our industry, every few years that's happening. That affects workers in the supply chain as well. So I think that we have seen in the last number of years the absolute need to be thinking about financial resiliency in the long term, and how important that is for our industry to make sure that we're doing our part in promoting this financial inclusion concept. And I think, you brought the examples up, right? We know now, having done this, that, workers are saving for their children. Right, they're saving for the investment for the future for their family, and I think the garment industry thinks a lot about, hey, light manufacturing is a way to kind of raise the standard of living in a lot of the developing countries that we're in, right? But if we're also not thinking long term about how we help prepare workers for those financial shocks, that it's not enough, right? And so it is really important. And I do think, and I do see some brands thinking of that. We're thinking about it. I think it's super important. And I'll give two examples of how we're thinking about it long term. So the first is, we have a large footprint in Africa. And so about 30% of our footprint today is on Africa, which is an emerging market. And as we look at, regions like, West Africa, Ethiopia, about, 6 years ago, it's so important hand in hand as we place business there to be setting up these models and making sure financial inclusion and wage digitization is part of the agenda as we develop those regions. And so that's one way that we are thinking about making sure that we are outsizing our resources and focus on those areas where we have learned in countries like Bangladesh and Cambodia, and we can bring that knowledge to make an impact. The second thing I see in terms of long-term is, you mentioned 60 million workers working directly and indirectly in the supply chain, apparel and footwear. And as you know, based on legislation in Europe and what's happening in sustainability, more and more apparel brands are looking deeper in the supply chain to tiers 2, 3, and 4. And so there's an opportunity for us to take all this learning and start to work further down the supply chain on these same initiatives. And so we're thinking a lot about how we make sure, as we're rolling out sustainability programs and traceability, how we make sure that we include this concept of financial access and resilience into our strategies as well.
Thank you. I think what you're outlining, Adrian, is this is definitely the right direction, but probably also that some of those things, some of those cornerstone things that we talked about as being critical to getting us through this digital wages space, trust, partnership, understanding different social norms and how to respond to that. I think, Mo, what you were saying about a recognition, and you know, the garment industry is a great example of one that certainly sees things going up and down. So this isn't necessarily a smooth trajectory forward on that journey, and really continuing to broaden out an understanding of the many different products and services that will be able to aid that journey going forward for workers. We could talk much more about this, but I think now I'm just ready to get going on this next step of the journey. So thank you, both of you.
Thank you. It was a pleasure.
Thanks, Christine.